The oversubscription on this sounds pretty amazing. 10 times oversubscribed?
It's normally 2 to 3. It's kind of the rule of thumb. So yes.
Is it worth it? Should it be?
That's a good question. Look, you have an iconic brand, you have a household name, you've got good growth, you don't have many other new apparel names coming out. It's exciting, and the valuation made sense. So it's a good entry point.
The household name part, does that mean this 10x oversubscription is retail investors?
That I don't know. But look, it's mostly the institutional money managers doing this, especially when you have the Haas founding family, descendants of the family, doing most of the selling. So that is kind of a caution flag, but I think the institutional market usually drives the oversubscription, especially on something hot like this.
Is that an issue with the Haas family? They own about 80% of the voting power and much smaller amount of the economic interest in this company.
That's another red flag, and something I've been doing in my classes for the last 20 years is kind of make the bull case, which we just talked about, make the bear case. There is a corporate governance issue. You do have a controlling family that will own 80% of the votes through the dual class of shares, which is not that unusual, especially in a lot of family-controlled, founder-led businesses. They do like to maintain the control with it, but I think investors need to be, buyer beware. You're going into a company knowing you don't have much control over the say of the company, but you can still ride on the economics.
As a brand, where is it in the value scale? For what type of consumer does Levi's target?
It's much more value conscious driven, and that's been their, there's the spiel and then the attraction. And remember also the top line growth is a lot with t-shirts, branching into women's apparel and the like. So it is, yes, I mean, you can have high-end jeans, but Levi is definitely more on the value side.
What strikes me is that fashion comes and goes. And Levi has been on an upswing for quite a while. I think Chip Bergh has figured this out. He knows how to really make the most of the brand and find the right places for it. But do you worry just about how fickle fashion can be?
I was going to use the word fickle. That's exactly right. Fashion is very fickle. So you have a company like, let's say, a Nike that is just consistent and is a juggernaut and year in, year out has done well. Look at Under Armour as something that's come in and out of favor. Is that some management missteps? Good question. The management team at Levi's is very well respected, and it's a very well-run company, but they have to hit the fashion right, and that's a tricky thing to do consistently.
This is obviously, though, a much more mature company with clear earnings, clear multiples, clear comps than some of the other IPOs we've got coming up.
That's correct.
Like Lyft. How are you seeing interest in Lyft and the valuation there compared to this one?
Yeah,
completely different companies.
It's completely different companies. So on the one hand, you have Levi Strauss that is profitable, and there are good comps. PVH, Columbia Sportswear, Nike would be just a few names to throw into that mix. Whereas Lyft, you're waiting for Uber, and it's a cat and mouse game. So Lyft will set the anchor for Uber, but you don't have profits. You can only use a revenue multiple. And the company stated, Lyft's management stated in their prospectus, they don't expect to be cash flow positive for the foreseeable future.
Is Lyft smart to go before Uber?
I think there is a good first mover advantage with this because you kind of set the market as opposed to hitching your wagon to the back of someone else. But it's a question of timing. The market is now roughly nearly an all-time high. The better time to go is when the market is up, as opposed to...
Hard to time that.
And it's impossible to time that.
Leslie, any early indication of if Lyft is oversubscribed as well? Or?
There have been reports that it was oversubscribed, but it's unclear this time how oversubscribed it is. The rule of thumb is if your deal's not oversubscribed, you're not going out, at least at one turn. And so, I've heard mixed things at this stage of the game, but it is still very early in their roadshow process. They have their New York lunch today, so we should learn more there.